Ladies and gentlemen, good day and welcome to the PTC India Limited Q2FY25 earnings conference call. The management team at PTC India is led by Dr. Manoj Kumar Jhawar, Chairman and Managing Director, Additional Charge, and Director, Commercial and Operation, PTC. Dr. Jhawar is accompanied by Mr. Harish Saran, Executive Director, PTC, Mr. Pankaj Goyal, ED and CFO, PTC, and Mr. Rajiv Malhotra, ED and CRO. At this moment, all participants are in a listen-only mode. Later, we will conduct a question and answer session. Please note that this conference is being recorded. I now hand the conference over to Dr. Manoj Kumar Jhawar for opening remarks. Thank you and over to you.
Good evening, everyone. I welcome you all to the earnings call of the company post our Q2 financial year 24-25 results. I am joined by the entire management team to take you along the earnings detail of the company. Mr. Harish Saran, Executive Director, looks after the business development and consulting business. Shri Pankaj Goyal, ED and CFO, handles the finance functions, and Mr. Rajiv Malhotra, ED and Chief Risk Officer, handles legal risk and corporate affairs related functions. I am also having with me Mr. Vikram Singh, who is Executive Vice President of the Marketing Department, and Mr. Anand Kumar, who handles the investor relations and public outreach functions. This post-earning call gives us an opportunity to share insights into our company's vision, performance, and strategic direction, and to engage with those who are integral to our growth and success, our investors, partners, and stakeholders. The Q2 quarter of every financial year for PTC continues to be an action-packed quarter for the company. The volume growth in this quarter has been 13%, which is around 24 billion units, and overall growth up to this 6-monthly period has been 6%. The consolidated profit for this quarter has grown up by 16%, whereas on a standalone basis there has been some decline in the profit after tax. This is because we had earlier received around 40 crore rupees dividend from a subsidiary, which this year we have not received because that subsidiary wishes to invest that in business to grow their business further. The core margin has been maintained at rupees 3.55 paise per unit for the half year and 3.60 paise per unit for the Q2. On the supply to power to Bangladesh, which has been an area of concern, and we have been listening very news about that. I wish to inform all the investing community that we continue to supply power to BPDP, and our receivables have started decreasing. The change in guard at Bangladesh did have an impact on smooth supply of energy and receipt of power, but our commercial and operations teams have been managing this very effectively. We are now very hopeful that there would not be any adverse issues relating to ongoing contracts supply of power to Bangladesh. The definitive agreement for sale of PTC Energy Limited has been signed with ONGC Green Limited, and our team in this process of completing the कॉल में कुछ प्रॉब्लम आई है, प्लीज चेक कीजिए जरा कॉल.
We can hear you.
Okay, all right. So then I'm sorry for the interruption. The definitive agreement for sale of PTC Energy Limited has been signed with ONGC Green Limited, and our team is in the process of completing the conditions precedent for carrying out the transaction. We expect this to close within the available time frame for definitive agreement. I hope all the investors will have received dividend distributed by the company. The concerns raised by proxy advisors and subsequent non-adoption of account by the shareholders are being addressed, and we will go to the shareholders for their approval of the account at the earliest possible opportunity. Now I will request our ED and CFO, Shri Pankaj Goyal, to give the financial highlights of the company for the quarter. Post this, we will have question and answer sessions. Once again, thank you for your continued support for the company. Wish you all a very happy new year and season's greetings.
Yeah, thank you, CMD sir. Good evening to all of you. Now I'll go through the financial highlights of PTC India Limited for quarter and half year ended September 24 on standalone and consolidated basis. First, I will go through the quarterly and half yearly results on standalone basis vis-a-vis the previous corresponding and half year. So, as far as the quarter is concerned, volume has increased by 13% to 24 billion units from 21.3 billion unit. Total operational income has increased by 19% to 197 crore from 166 crore. So the increase in operational income is mainly due to our increase in trading margin and higher surcharge income in this quarter. Profit before tax has decreased by 6% in spite of increase in the total operational income by 6% to 157 crore from 166 crore. As already explained by CMD sir, that this is because of the dividend income of 41.7 crore from PFS in the corresponding quarter ended September 23. Profit after tax has decreased by 13% to 117 crore from 133 crore. Total other comprehensive income has also decreased by 13% to 116 crore from 133 crores. Earning per share for the quarter stood at rupees 3.94 as compared to the previous corresponding quarter at rupees 4.5 rupees. Now I'll go through the half year ended results on a standalone basis. Volume has increased by 6% to 44.5 billion unit from 41.9 billion unit. Total operational income has increased by 23% to 385 crore from 313 crore. Profit before tax has increased by 5% to 300 crore from 286 crore. Profit after tax is almost remain at the same level of 223 crore. Total other comprehensive income is also at the same level of 223 crores. Earning per share for the half year ended stood at rupees 7.53 in comparison to rupees 7.54 during the last half year. Now I'll go through the consolidated results for the quarter first. Volume has increased by 13% to 24.3 billion unit from 21.6 billion unit. Profit before tax has increased by 12% to 306 crore from 272 crore. The profit is increase in profit is mainly because of the increase in trading margin and higher surcharge income, and also non-charging of depreciation on PL fixed assets as the same are classified as held for sale as per the Indian accounting standard. Profit after tax has increased by 16% to 234 crore from 202 crore. Total other comprehensive income has increased by 15% to 233 crore from 202 crore. Earning per share for the quarter stood at rupees 7.34 in comparison to rupees 6.13. Now I'll go through the half yearly consolidated results. Volume has increased by 6% to 44.9 billion unit from 42.3 billion unit. Profit before tax has increased by 19% to 552 crore from 463 crore. Profit after tax has increased by 23% to 423 crore from 345 crore. Total other comprehensive income has increased by 23% to 423 crore from 344 crore. Earning per share for the half year ended stood at rupees 13.21 as comparison to rupees 10.51. Thank you.
So do you want me to start the question and answer session?
Yeah, we can start.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. To ask a question, please click on the Raise Hand icon tab available on your toolbar or on the QA tab available on your screen. You may also post your text questions on the Ask a Question tab available on your screen. Kindly turn on your mic when the operator announces your name. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from Channamallu Halagodi, an individual investor. Please go ahead. Please unmute yourself and go ahead with your question, please. Mr. Channamallu Halagodi, I have unmuted you. Can you check your connection, please?
Am I audible, madam?
Yes, please go ahead.
I am a serious investor in the PTC India company and holding 8,000 shares in your company. I invested in this company on the hope of your concentrating on purely core business. So after announcing the divestment of PTC India Financial Service, I got hope that you will concentrate in the core business. But since 4 years, that PTC India Financial Service divestment is lagging behind. So I think you are not serious in the divestment of PTC India Financial. Just you are announced that announcement just to increase the market value artificially in both of the listed companies. This is my question, sir.
Your concern is understood. Please let me make it very clear that a call to divest in PFS, as and when that is taken, the market would be taken into the confidence. As of now, the PTC board had earlier considered its divestment, but at a later stage that entire exercise was put on hold. One reason I can tell you is that we are currently, in the midst of the transaction relating to PEL. Post that, this matter will be again considered by the PTC board, but I assure you that there is absolute no intention as to, increase the share price just on the basis of a notion that we make an announcement and we don't follow it up.
So please take it serious and do it early, sir.
Yes, sir. Yes, sir. Your concern is, taken note of.
Okay. Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, please click on the raise an icon tab available on your toolbar. You may also post your text questions.
Meanwhile, while the second question comes, I would like to thank our previous investor who had asked this question for having faith in the company. Kindly remain invested. We really need good investors who are with us for the long term.
Thank you, sir. We have a question from Shubhankar Oza from SKS Capital. Please go ahead. Mr. Oza?
Yeah, hi.
Your line has been...
Yeah,
please
can
go
you
ahead.
hear me? Am I audible?
Yes.
So, with respect to the divestment of PEL, what is the time frame that we have in terms of where are we in terms of the approvals, and when do we expect to close this divestment?
Sir, we expect to close this transaction by mid of the next month. We are in the process of completing certain condition precedents. If we are able to complete those condition precedents, we have the time till December of mid-December.
And is there any thought on the uses of that fund?
Sir, we would like to, of course, in parallel we are working, and the strategic call regarding investments would be taken up by the board of the directors at an appropriate time.
All right. And also, can you give a breakup of the receivables, which is, your H1 number? Can you give anything which is beyond 6?
Yeah, CFO would like to respond to your query.
So the total debtors for the half year is 6,609 crore, and our main debtors out of this is including basically if you see that we are also holding the creditors. So our net exposure per se, just a minute. So our net exposure is around 2,400 crore. So we subtract the creditor out of it, and the main exposure is in J&K is around 900 crore.
Okay. And with respect to your exposure to Bangladesh, what is the receivable now and what was it 6 months back?
Basically, there is no exposure as on date as far as the Bangladesh is concerned. So whatever amount is receivable, that is also payable to our generator. As on 30th December, typically our debtors to Bangladesh was around 850 crores. But after that, we have received some payment from Bangladesh.
So you're saying from 850 crores, as of today, it is zero?
No, it is not an open exposure. Correspondence, this is a back-to-back contract. So whatever we receive from the Bangladesh, we shall be paying to the generator. So if we have not received the money, then we have not paid the money to the generator. But the silver lining in this entire episode is this: the outstandings have substantially come down in past 1 month. Payments have been accelerated from Bangladesh side. So we don't see any problem going forward.
Okay. All right. Great. Thank you, sir. And best of luck. Thank you.
Thank you. Before we take the next question, would like to remind participants to ask a question. Please click on the Q&A tab available on your screen. The next question is from Suyash Bhave from Wealth Guardian. Please go ahead.
Yeah, thank you for the opportunity. Can we get a breakup of the total CBT or international volumes for quarter 2?
International volumes.
Our cross-border volume for quarter was, including Bangladesh, was 3,700 million units for the quarter, and for half year it is around 4,700 units.
So 4,700 is for H1 half year.
Yeah, for H1. Absolutely right.
Oh, okay. So, and any update on HPX and performance and volumes?
Actually, HPX is, as every investor in that company would know, HPX is not having a great presence in the day-ahead market, but it continues to do well in other segments of the market, except the day-ahead and the RTM market. So for TAM markets and for ADSS, it has been able to gather a substantial market share. But since the exchange business is basically revolving around the DAM, and unless and until there is some policy announcement relating to market coupling, etc., it is difficult to bring volumes to on the DAM segment on HPX. So that's it. That situation continues.
Okay, sir. Understood. I appreciate that. Would it be possible to share revenue and profit numbers for HPX for Q2?
Profit numbers. Yeah. So revenue for Q2 was, for the quarter, was it's around 5.77 crore, and the profit as a whole for HPX was around, profit before tax was 80 lakhs. Because there was some negative taxation and all that, profit after tax is 1 crore, around 1.
Okay, sir. Thank you. That's it from my side. Thank you.
Thank you. We have few text questions. The first question is from Abhimanyu Lakshman from Family Office. Dear sir, congratulations on a good quarterly outcome. I have a follow-up question on PEL divestment. Can you please elaborate or give us an idea of the range of conditions for closure of the transaction ONGC? Thank you.
The nature of discussions with the ONGC, I would not, like to go into that detail, but we are hoping to conclude the transaction by mid of the next month. That much I would like to share here.
Thank you. The second text question is from Lipika Kundu, an individual. Respected Chairman, sir, in spite of having good earnings in H1, why interim dividend has not been considered this time? Does it mean that H2 earnings will not be that good?
No, we do not see any headwinds as to our H2 performance is concerned. But only thing is for this quarter, as we have already said, that the PAT has been a little bit subdued because we did not receive any dividend from our subsidiary. So earlier also in the previous year also there has not been any practice of PTC to declare the interim dividends. So I think we are there is nothing surprising about not declaring the interim dividend. But after considering all factors, we will not disappoint the shareholders.
Thank you. Next text question is from Channamallu Halagodi, an individual investor. What is the timeline you will take to complete the divestment of PTC India Financial Services from here onwards?
I think I have already answered that question. Currently, I mean, earlier there was a discussion and then that decision regarding divestment was put on hold. Currently, we are, dealing with the divestment of PEL. So after that, board will take a call at an appropriate time. Divestment for the sake of divestment, I would like to, just apprise the investing community. Divestment for the sake of divestment is not the right thing to do. There has to be timing to it, and we believe that PFS has potential to grow. So, decision for divestment has to be timed properly, if it is to be there. So, those aspects will be considered by the PTC board.
Thank you, sir. Ladies and gentlemen, to ask a question, please click on the Raise An Icon tab available on your toolbar or on the QA tab available on your screen. You may also post your text questions. Ladies and gentlemen, to ask a question, please click on the Raise An Icon tab available on your screen. A reminder to participants, to ask a question, please click on the Raise An Icon tab available on your screen.
If there are no further questions, we can close the call.
So we have one text question. I'll just read that. Yeah, we have a question from Suyash Bhave from Wealth Guardian. Regarding the approval of accounts, what is the process forward? Will it be done in an EGM or would it be next EGM? What would be the outlook on that?
Actually, you see, the reason for non-adoption of the account most likely was some advice given by the proxy advisory services. So we are first in the process of remedying the issues and the concerns which were raised by the proxy advisory services firms. And the accounting is a quarterly process. So this quarter was too little a time for us to really remedy those problems. First, we would like to remedy those problems, then only go to shareholders to say and apprise them about the progress which we have made. And then we will seek the approval of the shareholders for adoption of the accounts. It may take a quarter or so.
Thank you. Ladies and gentlemen, that was the last question for today. I would like to hand the conference over to Dr. Manoj Kumar Jawar for closing comments. Over to you, sir.
Thank you very much, shareholders. I think all the meaningful questions have been asked, and I think we have been as candidly able to answer your queries. what I can share with you is here, thank you very much for remaining invested with us. Thank you for posing confidence in our company. Our company is doing everything possible to assuage the concerns raised by investing community. We are working very hard on that, and hopefully in the coming days, our company, you will realize the progress which we have made. Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of PTC India, that concludes today's session. Thank you for your participation. You may now exit the meeting.